Friday.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is...
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in opening a trading account over on our trading platform, then please do not hesitate to visit our website dmmtradingplatform.com. You can find the website link in the description of today's video. But let's have a look at the S&P 500. The S&P 500 yesterday continued its rally towards the upside, currently trading at 4,294. Before I actually start today's video, I want to address some of the really negative comments I've actually been receiving as of recent on YouTube. I was calling to short the market during this period here. You can look back at my videos. Everyone knows that I was dollar cost averaging towards the downside. Why? Well, that was because we were still trading in a downtrend. We have been in a bear market, the worst start to the stock market in over 55 years, dating back to 1970. So sorry, not 59, 52 years. It's been a very tricky month. The drawdown in the S&P 500 at the lows was 24%. So I was anticipating another bounce off the 200-day EMA and for us to trade towards the downside. And where I think, now that I look back at my mistakes that I made, where I think I made a mistake was, I need to recognize that the economy and the stock market are two separate things. Just because the economy is doing bad, it doesn't always mean that the stock market has to do bad. A great example of this is just 2 years ago, during this 30% sell-off that occurred here in the S&P 500, the Nasdaq and the Dow Jones 30. The economy was doing terrible. Most countries in the world went into lockdown, and guess what? They continue to do for the next 12 months. But what happened to the stock market? The stock market accelerated at such a rapid pace, and we only have to really zoom out and look at the bigger picture to see how aggressively the stock market rose over the next 2 years, even though the global economy shrunk significantly, in fact to the lowest level since World War II. So, now looking back at the stock market at this moment in time, my bias is that we shouldn't be trading up here. We should probably be trading down here. Why? Well, I fear that going into the winter months, we are going to see, a massive struggle. Many households across the globe are going to really struggle to, first of all, pay their bills, put food on the table, let alone go out and buy expensive tech or go into have several subscriptions like they may have done in the past 2 years. But it's important to understand that the market doesn't care about my bias. I am irrelevant. And as the old saying goes, don't fight the Fed. So everyone who continues to put negative comments on my YouTube channel, yes, you are right. I got it completely wrong. And I apologize to anyone who actually listened to my advice. But, I ask everyone to read the description to every single video that I post out where I say, please do your own due diligence. I'm not a financial advisor. I'm just using YouTube as a platform to come on and share my opinion with you all. So, those who are continuing to comment negative comments on my YouTube channel, you are very naive to think that I'm going to get it right all of the time, because I'm not. This is trading. This is perfectly normal in the trading industry. But what's important is that when you get it wrong, you identify that and you change it. And that's exactly what I've done. I haven't yet bought the S&P 500 or the Nasdaq 100, but over on my stock account, I put some money to work this week. I spent most of my cash actually and bought some of the big tech names. Do I think the S&P 500 and the Nasdaq 100 are going to probably decline within the next couple of days and weeks? Absolutely. Yes, I think that they are. But it's clear to me now that we've broken out of this downtrend, and this now opens the door up to at least the 4,600 area, where that 0.786 fib area is. So, the fact that we are now overbought on the RSI tells me that we are due a short-term pullback. I think we could go as low as a 200-day EMA, or maybe as low as this red box, 4,150. And I think, that's where bulls will then start to return to the market and send it up to that 0.618 fib area, which is all the way at 4,353. So, I've taken action, I've identified that I got it wrong here, and now I have turned bullish on the market due to the fact when the S&P 500 claws back 50% of its losses in any bear market, historically that means that the lows are in. So that would tell me that the June 16th lows are in. Could we potentially go and return down to, perhaps 3,700, 3,800? Absolutely. I'm fully aware that is a possibility. But my stock investments that I opened this week, I will now stick with them through thick and thin. If we go down to go and test the lows, then that's absolutely fine. I will continue to hold. But I do know that ultimately one day we're going to be probably trading back up those all-time highs. With regards to my leverage trades, once I do buy the S&P 500 on the next dip, which is hopefully down towards that 200-day EMA, I will have a very tight stop loss. And if we do continue to trade towards the downside, then that's absolutely fine, because I will know that then I can then open a very large position down at the lows, because as I just mentioned, historically, when we claw back 50% of our losses for that bear market or that downtrend, historically that tells you that the lows are in. So that would indicate that the 16th of June, those lows are in. So there's going to be plenty of money-making opportunities in the in the short-term outlook here. I just ask that many of my YouTubes just watch my videos more with an open mind. Yes, I got it wrong for this very small period here, but now we have the potential to get it right for this whole period here. Or even if I am wrong short term, well, I now know that the lows are probably in. So that gives me a fantastic buying opportunity from the lows to go and trade all the way back up to the all-time highs. So I just ask that all my viewers look at my videos a little bit more openly minded and know that I'm not a financial advisor. I'm just using YouTube as a platform to share my opinion. Whether you agree or disagree with my opinion, that's absolutely fine. I enjoy debating with my viewers on YouTube. But I know that many viewers appreciate the videos that I post on a daily basis. I post 6 videos a day. I put a lot of hard work and effort into this YouTube channel. And, even if you don't agree with my bias, it's just still good to have an understanding of what other people are looking and understanding from seeing the current chart. So once again, I would like to take this opportunity to apologize for those who did, in fact, follow me and didn't do any of their own due diligence, and they started selling from the 50-day EMA. I put my hands up. I got it completely wrong, but now there's plenty of time to correct that and earn back the losses. So I'm very excited for the foreseeable future. There's many investors saying that there could be a very strong rally going into Christmas time. There's always the potential for that, and if there is, it's hopefully a move that I hope I myself and the rest of my viewers here can capitalize on.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is